Thinking of buying a mutual fund but not sure where to start? You are in the right place because by the end of this video, you will understand mutual funds better than 90% of new investors. Let's start with the basics. We have all heard this before. A mutual fund is just a pool of money collected from many investors and managed by professionals who invest it across multiple companies on your behalf. Sounds simple, right? But that explanation alone is not enough to help you choose the right mutual fund. There is a lot more behind this concept that you must understand before making any decision. So let's uncover what really goes on behind any mutual fund, no matter where in the world it is. Let's begin. If you are buying a mutual fund, that means someone is selling it, and that someone is called an AMC or asset management company, also known as a fund house. Just like every product, say a phone or a watch has a price tag, every mutual fund also has a price tag given by the AMC. That price is called the NAV or net asset value, and it changes every single day depending on market performance. Each mutual fund is managed by a professional fund manager, the person responsible for deciding where to invest your money. But managing a fund is not free. On top of the NAV, there is an annual charge called the expense ratio, also known as total expense ratio, similar to paying a maintenance charge for your apartment even after owning it. Now, here comes the real challenge. There are hundreds of AMCs around the world. Each AMC offers dozens of mutual funds, and every mutual fund follows a different investment strategy and charges a different expense ratio. So, the big question is which mutual fund should you choose, from which AMC, and how do you buy it? If you can decide which mutual fund and which AMC are right for you, then how to buy part becomes the easiest step. Let's see how you can choose the right mutual fund smartly. The process always starts with your investment goal. Ask yourself, why am I investing? Is it to build long term wealth, to get tax benefits, or to invest for a fixed duration like 10 years to reach a certain objective? Your purpose defines what kind of mutual fund you should even look for. Now comes the most important part, finding a mutual fund that truly fits your purpose. Every mutual fund in the world can be mapped across 8 key dimensions, and each one reveals something unique about how that fund works, what risks it carries, and whether it's the right match for you. In the last column, you will see the Vanguard Global Equity Fund as the real world example. For the first two dimensions, it's marked as equity, meaning it invests in stocks for higher growth, and open ended, meaning you can buy or sell anytime. The same idea continues across the remaining 6 dimensions in the table. Each one helps you understand another aspect of how this fund works. Pause here if you need to and take a look at the table. Each dimension shows how the fund works, its risks, and whether it fits your goal. Once you know the fund's dimensions, it's time to dig deeper into its core properties, the factors that show how your money is actually managed. Every mutual fund anywhere in the world can be understood through 4 key layers. Each layer explains key terms, how the fund is managed, its costs, performance, and risks. Let's look at the first 2 layers. It is shown with the terms, a short explanation, and what you can learn from them. We will continue using the Vanguard Global Equity Fund as the real world example. In the table, you will see the Vanguard Group listed as the fund house, the company responsible for managing your money. This fund is actively managed, follows growth and a value style, has a long operating history, and comes with a 0.39% total expense ratio. Go through the remaining terms in the table to see how each one describes a different part of how the fund works. The same approach applies to the last two layers, which focuses on terms related to performance and risk. Pause here if you need it and review both tables. Understanding these layers show you exactly how the fund behaves and helps you decide whether it is the right fit for you. Now it all comes together. Your investment goal, the 8 dimensions, and the 4 layers of fund analysis. When you combine them, you are not just picking any mutual fund, you are shortlisting and evaluating it like a pro. Instead of following random advice, you will know exactly why you chose that fund. And that's what makes you a confident, informed investor. Once you have chosen your mutual fund and AMC, buying it is the easy part. Here is the order from highest to lowest cost. Banks or relationship managers, easiest, but usually the highest commissions. Independent financial advisors or brokers, usually high commissions, almost similar to banks. Online investment platforms or apps, low commissions or even zero commission direct plans. Directly from AMC website, usually the cheapest route, offering direct plans with no intermediary cost. So, to recap, know your goal, understand the 8 dimensions, study the 4 layers, pick the fund and buy it the smart way. That's how you invest in mutual funds with full clarity and confidence. If you found this helpful, don't forget to like, subscribe, and share this video with someone planning to start their mutual fund journey.